Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So for today, we're going to go over the overall portfolio value as well as the metrics for the portfolio, the buying power in the portfolio as well, the individual holdings and how they are performing. There's a lot of red today in the market, which means that there's probably some deals that we can take advantage of. Then let's take a look at the watch list. And of course, that is also red. So we will talk about those stocks as well. So jumping in for today, we are down about $1,200, a 2.2% loss. Then on that 1 week mark, we're down 761, a 1.37% loss. Then that 1 month mark, we're still up 26, nearly $2,700 with a 5.4% gain. 3 month mark, we're up 4,700 with a 9.42% gain. And then year to date, we're up 5,600 with an 11.4% gain. That 1 year mark, we're up 11.6 with a near 27% gain. And then all time, we are up nearly 29 grand with a 111% gain. Then, of course, buying power is sitting at 99.74. We do have a dividend coming in from both Realty Income and Google before the end of the month, and that will bump us up to $100 in the account for the free cash or the buying power within the portfolio. Next up, we've got the individual holdings, and there's a lot of red today, guys. Every stock is down, but just because it's down today does not mean we are actually down on the position. So this just shows from where the stock opened, trading day starting today, and where it's at currently. This does not base it upon our average cost. So just because the overall portfolio is showing red does not mean that we're actually losing money on the positions. That's really important. So it gives you perspective, because just because it's a red day does not mean that we're actually losing money based upon our average cost. So it's just meaning that the stocks are down based upon where they opened today in the market. But I'm sure some of them we are losing some money, but it's actually a good thing because that means that there are opportunities. Starting off with Realty Income, Dividend Aristocrat, ticker symbol O, at 56.30 today. We've got 5 shares, $281 of market value. Average cost is right around $52 a share, so still up here on this position overall. 0.51% of the portfolio is in Realty Income. Today we're down about $11. In total, we're up $22 with an 8.81% return. Dividend coming in of $1.34, which will put us over that $100 mark for the free cash in the portfolio. So overall, guys, this is going to be one of those positions that I do want to add to when it's down, when it's near my average cost. And we still have another like $5 for this to drop. So a 3% loss is not enough for me to be purchasing shares of this company right now. So even though it's red, it's not down far enough for me to purchase it. So I'd actually rather it drop, 13% in order for me to jump back in and be purchasing the company. Next up, we've got Altria down about 2% today at 58.02 or $58 per share. 320 shares, $18,500 of market value. Average cost is right around $47.30. 33.8% of the portfolio is in Altria. Today, we are down $316, down about 1.7%. Total, we are still up $3,400, a 22.72% return. So, guys, even though the stock is red today, we're still in the green overall. We're still making money. Plus, this brings in $320 every quarter. So this actually buys us a share of Apple guaranteed. So that's the job of the portfolio. That's the overall strategy, is this month buys next month. Now, I don't do that every single month depending on where stock prices are. And that's what Realty Income is. It's the substitution for me to put money into if stocks during a certain month aren't at prices that I'd purchase them. But overall, guys, Altria does its job really well. And as long as Apple stays below like $320 a share. Excuse me. As long as Apple stays below $320 a share, Altria will buy it forever. And that's the main goal for this year, is to just get me some more Apple shares. Next up, we got Coca-Cola at 70.80. We've got 15 shares of this Dividend King. Market value is $1,062. Average cost is around $60.50 per share. Around 2% of the portfolio is in Coca-Cola. Today, we are down $9.50. Total, we're still up $154 with a near 17% return. So even though we're red today on the position, we've still made almost 17% on our money. I'm still happy with that, guys. So this isn't in a buy range for me either. It should have, it did go down, but it should have dropped more for us to even consider purchasing the stock. Next up, we got Apple, which is down big, kind of 4%, but 218.48. I believe it's near my average cost here too, but down $9 today, almost a 4% drop. So we've got 10 shares, and I started the year with 8. So my goal is at least a share a month. So I should end the year with like 20 or more. So we're on track. I just need to buy my share for this month. Market value is almost $2,200. Average cost is $218.89. So it is a little bit below my average here, which is a definite buy for me. Around 4% of the portfolio is in Apple. Today we're down $91. Total we're down $6 or $6.47. It's going to fluctuate because, of course, the market is open. And the stock's been volatile lately. You can see it shifting quite a lot. So there's a lot of buys and sells. Most of the time, stocks do trade constantly, but Apple is one of those that shifts a lot. There's a lot of buying and selling because there's a lot of news around it. So the price is going to fluctuate pretty quick. So just overall, guys, this is still going to be one of my biggest buy for the year, and I'm glad that it's now lower than my average cost. If I had the free cash, I'd transfer it right now. Next up, we got AbbVie at 212.82, 95 shares, $20,000 worth of market value. Average cost is right around $95 per share. 37% of the portfolio is in AbbVie. Today we are down around $360 with a near 2% loss, but total we're still up $11,175 with a 120+% return here on AbbVie. So again, guys, stock is red, but I'm still making 11 grand. I've still made over 100% on my money. So just because it's a red day does not mean that you're totally losing money. You're losing money from where the stock opened to where the stock is trading at currently. That does not mean that that it's a bad thing. Next up, we got Visa, which is down relatively big today, $330 per share, 35 shares. Market value is $11,500. Average cost is $350, so definitely around $347. So a definite buy here. 21% of the portfolio is in Visa. Today we are down nearly $400. Excuse me. Sorry, yawning. Total, we are down $600 with a 5% loss here on Visa. So, guys, definitely a buy here for me for Visa. Google is down to 163, which is around I believe the first time I bought Google a couple of years ago was 163, or at least I think last year was my first time purchasing Google. But my average cost has gone up since then because the price, I just kept buying it. But right now it's at 163.60, down 2.5% today. We have 6 shares, around $1,000 of market value. Average cost is $193.35. 2% of the portfolio, 1.8%, is in Google. Today we're down $25. Total, we're down around $180 with a 15% loss and $1.20 coming in on the 17th. So, guys, as of right now, honestly, either Apple, Apple's not at a big loss, but it's still nice that it's below my average. Visa is down $600, but then Google's down only 178. It's a smaller position, obviously, total money-wise, but my best buy right now, I would still say it's $30 per share, and Visa is 17. So, honestly, even though Apple is near my average, it'd be smarter to purchase a share of Visa or Google this month. So, let's take a look at the watch list today. And I said I wanted to buy Costco around 1,000. Well, guess what? It's way lower than that now. Look at that. That's down $100 in the past month. I don't know if it's worse for the week or not, but and I don't think Costco is selling 12% less product. I just think the market's overreacting. So as of today, I would definitely be buying Costco too. I mean, 50-week low to high. Well, it's about 700. So and it's like what, 11? Yeah. So still could fall lower, but I would buy it at this price. And then Berkshire below 500, I'm taking it. So because the 400 to 49 or yeah, 52-week high to 52-week low. Um, I mean, 450 is a really good price for it, but I mean, just to open a position, I'd buy it here. That'd be fine. So, guys, overall, very red day. There's blood in the market, right? But not something that worries me. In fact, I prefer when my stocks are going down because I get a better deal on them. I get better deals on quality companies like Visa, Google, and Apple, Coca-Cola as well. I wish Coke would fall more so I could buy it. But guys, the main goal for the portfolio is to use this month to buy next month. So, Visa, Google, and Realty, if it was, probable right now, I could buy a share of Coca-Cola with that money. But as of right now, it's not at a buying price for me. So when I get paid on Friday, I could either buy a share of Apple, Visa, or Google as long as stocks keep falling. And that's good news for me because those are three of the positions that I want to be in the top five. So the more they fall and the more often the more frequently I buy them, the bigger those positions are going to be. So, with all that being said, guys, thank you so much for watching. Remember to hit the like button on the video so YouTube helps out with each individual episode. It helps out a ton, as well as hit subscribe, guys. If you guys enjoy the daily updates on the portfolio, me giving you the transparent reviews, hit the subscribe button because I've been doing them every single day. I've been pretty consistent about that. It just depends on my work schedule, but I am trying to be as consistent as possible. So if you guys enjoy the grind, enjoy the transparency, hit that subscribe button, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.